Free me. I just lost $6,032 just like that. Just like that. I have to show you the good and the bad, man. I have to show you the good and the bad. I can't just show you the times I make money because, that's just not the reality of trading. And trading is risky business, and I know a lot of you guys are interested in it. And so, I need to show you what trades I've done, why it went wrong, what I've learned from it, what I'll do differently next time, and how I'm going to pattern up 2020. So, if you want to know how I lost $6,032, please like, please comment, please subscribe, help the channel get to 3,000 subscribers, and we can get the world of investing and maybe not trading out to more people in a clear, simple, and transparent manner. But first, let's get into this. You guys are looking at my eToro account right now. If you know, you know. eToro is the platform that I tend to do trades on. I've been trading since like 2017, 2016 almost, and had an up and down journey. But to be honest, more recently it's been up, which is good. And it's been going well. However, I've been making some different types of trades because I thought I kind of found a formula, and obviously it's not really worked out on some occasions. So I want to obviously be absolutely transparent with what's happened, and so you guys can basically take that information and that insight and add it to your armor and your repertoire. So let's get into this. You can see Chewy, SL. I got stopped out on Chewy. It hit my stop loss, and I did 3 separate trades. The reason why I break up the trades is for 2 reasons. One, because with some amounts, like with some stocks, based off their liquidity, it won't let me do big trade sizes, so I have to break it up. But actually, the main reason is that I like to test and de-risk by doing different things with different blocks of the trades, just in case I'm making the wrong call in one place, so I can tweak it in the other place. So even if I was trading say £600, I might do say a £300 trade, a £200 trade, and a £100 trade. The £100 trade, I might do something riskier with it than the 200, and vice versa with the 300, etc. So in this scenario, what basically happened and why did I lose all of this money? Well, let's just basically start from the top. I basically put these 3 sums in as 3 individual trades, and I opened them as short positions, so positions that I wanted actually the stock to go down in price, and these were the different opening prices that I actually launched at, and at first it was going well. So by the time the market closed last night, I was actually in about $500 profit. No, $276 profit to be precise, which is fine because I wasn't trying to close at the end of the night. I knew that the strategy was after hours trading, when all of the private equity and the VC firms start to clear their books and they actually start to get rid of all of their shares and dump them onto the market and so forth. That's when the selling pressure happens, and then what you typically might see is a gap down, whereby when you open the next day it will open at a lower price, and at that point I sell, bing bang bong, Bob's your uncle, take that money, and I fly to Mauritius or somewhere. But that's not what happened this time round. During after hours, I monitor the price action. So what I typically do is go to Market Watch, and you'll see here, or it has loaded, that I can see what is going on in terms of the chart for Chewy. And when we're out of hours, it will actually show me, this will be purple, and it will show me that, okay, this line, for example, might be, say, the line when the market opens, and it tells me what the price is doing beforehand. So what actually was transpiring, and what I'll actually do to show you, I'm going to go to the Chewy stock and see if that actually gives a better visualization of what basically happened. But let's just screen that, and I'm going to go to the, I'm just going to put it on the 10-minute chart just because. Yeah, so what basically was happening is that originally it was actually going down. So I was seeing some positive movement after hours, and I was like, actually, you know what, this is going in the right direction. I don't know if this is actually the correct representation. This might have been last night, but basically between here and here, it was going down. And then what happened? It just started to rise. I literally can, tell you that what basically happened was, I took a phone call. And you see me, like, if I'm trading, you can't phone me, bruv. Like, you cannot phone me, bruv. Like, I even know why I picked up that phone call. I picked up the phone call and I was just like, yeah, I can't chat to you. And I locked it off. I don't care what you're going to tell me. You could be telling me I won £1 million. You could be telling me that I got a baby on the way. While I'm trading, I can't even talk to you. And then where I was actually tracking my profits. So let me backtrack a little bit. While it's in after hours, I actually have this little spreadsheet formula, and I basically continue to plug the price that it is in after hours, and that tells me how much money that I'll be making or losing. And at the time, I was obviously making a lot more money, so I would have closed out at about £3 grand profit at that time. But after that phone call, the price started to go in the absolute wrong direction, and it just kept on rising and rising and rising, the share price, and obviously I wanted the share price to fall. And so I tried some different tactics. So with these trades, what I tried to do is change the stop loss, like that was going to have any impact. It had no impact whatsoever, because obviously I'm not actually in the market, it's after hours. And then wait until it opens and see if it registers a better stop loss. It doesn't stop me out at a lower rate. It didn't work. And I knew it wouldn't work, but I thought, let me try that anyway, just to say I did. But I can verify and guarantee that it did not work. And it's a good thing actually it didn't work, because that means that if you have a stop loss in terms of profit, it won't stop you out on the smaller profit amount. It will give you all of the profit you deserve, which incidentally is what happened with me for Beyond Meat. So yeah, I think that is a good thing if it's going in the right direction, obviously. Then with the last trade, I thought, you know what, let me see where it goes. Let me not close it straight away. And in fact, if it's starting to go into the right direction, I will reinvest this money or retrade the money in order to try and recover back some of the losses. So this was actually started at about 800, and it was going down and down and down to about a 300 loss. So I was like, you know what, it's going in the right direction. I said, if it hits the 150 mark, that was the mark that I was thinking that it's kind of going to go beyond the point of no return, then I'll put all of the rest of the money back in, might even add some more money just to try and reclaim that. It never hit 150. I think it got to about 310. It was like 380, 360, 310. And then it decided to shoot back up. And then when it shot back up, I just changed my stop loss from about a 2,000 stop loss to a 1,000 stop loss. And then it stopped me out. It stopped me out at 1,000, as you can see, and obviously that money there was lost. If we go to the 30-day movement, what you can also see is Fastly. I tried the same thing with Fastly, but as you can see, when you look at it, 2 Fastlys I lost money on, all in the same period, and 3 of them I made money, albeit smaller. I made money on 3 and 2 that I lost. So what went so different that I lost on 2 and made on 3? And basically it's as follows, and the key thing to note is the timing. You can see the time here versus the time here, and what it basically was is that when I traded Uber was actually tanking because they had a bad earnings. So I was losing money by not being in the Uber trade. So I went into the Uber trade early and actually got some extra profits along the journey before obviously making the bigger profits that I made after lockup. Fastly had bad earnings as well. So I thought, you know what, the same's going to happen with Fastly. It didn't happen with Fastly. The same did not happen with Fastly. So I tried that, and that's why I was losing so much, because the price was actually rising rather than falling. So what eventually happened is that I was stopped out from both of those trades. But what I actually did is that I put more money in order at the highest point right before close, in order to try and do the original lockup strategy. And then obviously the next day those ones performed obviously not well, because they performed at just $500, but it taught me that actually, you know what, there's no point even trading earlier on in the day. Just literally do the lockup trade and just leave it at that. And that's what I basically learned from this situation. So as you can see, over the last 30 days, it says I lost 5,564. I say 6,032 because I'm not counting this £500-600 or whatever that is. But I'm obviously focused on, you know, all of this amount that I basically lost during that time period. Now, if you want to see some further time frames, you can see 55 in, 57 out. In the last 3 months, overall, I've actually made $2,000. So, albeit I've lost $6,000 in the last, you know, couple of 3 weeks or whatever, when you start to look back at the Uber trades and they were all in profit, and the Beyond Meat trade as well, then actually you can start to see that I made that money, which in the last 3 months I'm still profitable. But obviously, you know, recently it's just been absolutely poor. Like, you could have a case to say you should have just stopped from Uber, but obviously it's the whole point of trading, right? You want to try and take advantage of an opportunity that you think might happen. If you look at the last 6 months, you can see even a bit more. So over the last 6 months, I have actually still been in profit, albeit not an amazing amount. I have been in profit. And then if you look at the last year, it's less of a profit, but that's partially because, well, not partially, it's mainly because I closed some trades this year that were actually from last year, but they weren't really trades. It was just cryptocurrency that I bought that basically I got stung by. And so effectively, that's what's being counted under this year. But what you'll actually see when I want to show you is that obviously I made some little Tesla trade, little Binance trade, etc. This is the cryptocurrency trade that happened. But you can see all of these S&P 500 index trades that I was making, and obviously some of them are small amounts, granted. You see $12.30, $73.33, 76, 126, but this is, I'm doing this every day, so I'm building this money up every single day, like every single day, making on average $60-70 or whatever. For me, was a pretty good a good thing. And obviously I know this formula that I was doing. The only reason why I stopped this formula is because it's not a, well, it is a day trade, but sometimes I have to swing the trade over a few days, and I just don't even want to be in the market that long when I'm trading. I really want to just trade and get out within, like, I want to be in and out, man. I'm an in and out person, do you know what I mean? Like, I just want to just get in, get out, do my thing, and just cut. You feel me? I'm not trying to linger. Like, this is one of them linger. You have to linger to do this trade. I'm not really trying to linger. You feel me? So this is a linger trade. However, it does work, and it just shows you that, you know, you have to do the lingering thing sometimes, and actually it pays off. But I next time will do these types of trades with bigger amounts in 2020. So I'm hoping that in 2020 you start to see this as 200, 300, 300, 200, 500, 300, 200, 200, and that way at least you know, week on week, hopefully I'll be bringing in a couple of £1,000, or, you know, maybe £1,000 on a weekly basis, because I'll be trading bigger sums if I repeat this formula that I was basically doing. So yeah, hopefully, like, stick along the journey, and I will probably talk about this a lot more in 2020. I'll probably have a referral link as well for you at the time, which might give you some freebies. So yeah, look out for that when that comes. But yeah, the moral of the story, if I want to give you my top 3 trading tips, in terms of, you know, what I would, you know, recommend that you guys think about, is number 1, do not trade what you are not willing to lose. People say that for investing, and I think it's sound advice for investing, but let's be honest and let's be practical. You're never going to lose all your money investing. It's very, very rarely going to happen. It's only going to happen if you absolutely take a massive punter investment, where it's just, oh, I was going to throw £1,000 on that. I mean, it's just like with no thinking whatsoever. It's just not likely to happen. You might plateau, you might lose a bit, you might gain a bit, you might do really, really well, but you're not going to lose it all. With trading, you can lose it all. Like, you can just lose it all. And you have to be prepared for that. So just make sure you have cash reserves, a cash balance. I talk about this in all of my videos. You know, have your emergency fund. You're not trading, you know, little, you know what I mean, your little daughter's milk, like your milk money. You're not trading your tax credits. Like, you're not trading your child support. Like, don't be, this is where I'm coming from. Like, don't trade money that it's not for you to be trading. Trade money that you can actually lose, because if you trade money that means something to you, like your grandma's birthday money, like if you trade grandma's birthday money, It's a madness, fam. I'm telling you, it's absolutely a madness. You don't really want to go down that road, bruv. It's very, very peak, bro. It's very, very peak. I've traded other people's money before. Cause they listen, it's peak. Even with disclaimers and contracts and NDAs, I made them sign with blood, and they still look at me funny till this day. So trust me, it's not worth it. It's not don't trade money that is not absolutely yours to trade and you don't mind losing it. Number two is always have a traded strategy, man. Like, do not trade aimlessly. Do not follow other people. Like, really focus and really think about what you're trying to do. It doesn't matter if you lose, but it matters that you don't learn from what you've done. I've learned from all of these trades. I know from these trades here to not go and trade early into the market unless it's like a big Uber stock that you just know is going to absolutely go down, or you're 80-90% confident. But if it's a smaller stock that has a bad earnings, I'm just not even going to bother trading earnings because it's just so volatile. You never know which direction it's going to go in. I've learned that from this one. From this trade, I've learned that even though the key issue with this trade that I want to talk to you about is that here you can find that it was actually 87% owned by VC and PE firms. Typically, when you've got a company that's IPO'd, these private equity firms and VC firms are tasked with getting the company to IPO stage. They want a return on their seed A, B, C, D, E, F, G, element of P investment, whatever round. They want that return, and typically that's when they're going to be selling during the after hours period. However, when you dig deeper into this specific company, you will find actually it wasn't 85% owned by VC and private equity. In fact, 67.5% of the ownership was by PetSmart. PetSmart basically owned Chewy, and PetSmart is in a mad financial situation at the moment, and Chewy is meant to be their saving grace to get them out of it. And I knew that before I did this trade. I knew that, and I thought, you know what, I'm still going to take the risk. The second thing is that they then sold another 15% to a private equity firm. When you dig into that private equity firm owns PetSmart and Chewy. And I'm telling you, brother, these boys, yeah, these money boys in, I was gonna say Guantanamo Bay. It might as well be, because they're all crooks. They're all crooks, bruv. Because I'm telling you from now, yeah, how can a company own another company 67.5%, and then out of the other 35.5%, 17.5% is owned by a private equity firm that owns both the two companies? Dickhead, bruv. What is this, fam? Listen, these boys know how to just put money into pots. They're putting money into pots, and I'm just here like some chump trying to figure it all out. And they're just putting money into pots and just juggling it like Krusty the Clown or something. No, they're joke, man, bruv. It's actually getting me mad, bruv. It's getting me heated even thinking about it, bruv. I swear down, I'm not having it. So now that I've learned that, if I find some dodgy accounting or some dodgy, Excel spreadsheet stuff, like, I got this information from articles and from the S1 filings, because I'm a nerd like that. Like, I know I don't sound much like a nerd, but I am a nerd. Like, and I will just go and dig into that information. I find it exciting. But I looked at that and I was like, suspect, but I have never traded this type of thing before, so let me just give it a shot. I gave it a shot, and these man I just feel bumped, bro. I just got bumped, bro. They just pulled my pants down and just lubed me up, bruv. They didn't even lube me. In fact, they just went straight in raw. I just got bumped. But listen, that's fine. It is what it is. That happened. So, and also, no insiders own this company, which is also a bad sign, because typically the CEO might own 8%, 10%. The CFO might own 3-4%. The CTO might own another 5%. The staff members collectively might own 20%. All of them might want to actually, let's get some profits when it goes to IPO. No insiders owned any shares in this. Or maybe they did. Maybe they own the private equity firm that owns PetSmart, that owns Chewy, that owns the private equity firm, and all of these little jerkman pots that they've got. But listen, those were the very, very key triggers that I should have saw the warning signs. And I'm the dickhead, because I didn't see the warning signs. I saw the warning signs, in fact, and I didn't act on it. And I thought, you know what? I'm still going to take a punt. So that is something that I have learned. I have learned by being burned. I'm being burnt, and I've learned. And now I won't obviously do that again. The third thing. So the first one was always don't invest money or trade money that you're not willing to lose. The second one is always have a strategy. The third and final one, which is going to sound like a weird one, and take it on board if you want to. You don't have to. Like, this is just me chatting at the end of the day, but I wouldn't say it if I didn't believe it's not gonna help you. The third one is have a friend, a family member, a girlfriend, a boyfriend, a sighting, a crackhead, whoever. Have someone, yeah, that you know that's going to keep you accountable. There's people that I go to tell them I'm making these trades. You think I'm chatting rubbish? Do you want to see the WhatsApp messages? There's people that know I'm doing these trades, and the reason why is because by verbally saying this is what I'm going to do, they're going to say, oh, but are you going to do that? Does that make sense? They're going to challenge me, whether they know about the stock market or not. And that helps me think about, actually, am I making the right call? One person that I do that with is Any. You guys know I do the Pip Talk Discord channel community forum with Any, and we talk about these trades all the time, and we both agreed to do it. And then he pulled out and he said, you know what, I'm not doing it because of XYZ reasons. And I was like, all right, cool, that's good, because then that makes me think, you know what, he's a trader, he's been trading for 5 years, way longer than I have, way more successes than I've had. Maybe I should learn from that. And if I didn't do it, then obviously that is good accountability. I chose now to do it. I can only ever have myself to blame. And so that's why I feel like it's important. But back in the day, I have friends that are not even in the market that I will tell them that these are the trades that I'm doing, because even so, they can be like, oh, did you do that last time? Or how did that go? Or whatever. They can ask the basic questions that will just help me stay accountable. Listen, if you're staying in your boxes, in your little dark room, you know, down Leicestershire, trading with no one holding you accountable, you're going to end up a very, very violent lad or lass. I tell you that from now, because you need someone to sound these ideas off. You can't just be coming out of your little loft apartment talking about, oh yeah, I lost 300 grand, 3 grand or whatever. See if you don't just kill the next man that you see on road. See if that doesn't, you'll just get locked up. I'm telling you, you're getting locked up. So you need to stay sane, talk to someone and make sure, because honestly, losing money like this can be extremely, extremely dangerous psychologically. The reason why it's not so dangerous for me is because, one, I'm already screwed up in the head, so it won't fix me anyway. I can't go that much worse. But aside from the fact that I'm screwed up in the head already, I've done this for a longer period of time. I only trade what I don't mind losing. I still have cash reserves. Listen, I'm not sitting here trading child support and, you know, like my grandma's, you know, dialysis fund or whatever. Like, I'm not trading money that I can't be, you know, happy to lose, etc. And so from that standpoint, it's okay for me, and I'm able to learn it from it, and I'll stack the money back up, and then obviously I'll go again. Do you see where I'm coming from? But I've seen so many people, and I'm not talking about I've seen it when I haven't seen it. You guys, how many people do you think I talked to about the stock market since starting Infin Investors? I've talked to over 1,000 people. Between my emails, between my DMs, between the comments, between whatever channel, I've talked to over 1,000 people. So many people send me their portfolios. So many people talk to me about their trades and investments. And I've already got other WhatsApp groups of people that I know that trade from prior to obviously even starting this channel. I've seen it time and time and again where people's emotions, where people's this or that causes them to lose money. And so I'm trying to educate and say, look, you need to have someone that's going to hold you accountable. I'm only one man. Listen, I can't be that guy. But there'll be someone in your personal life that you're going to be close to, a girlfriend, a boyfriend, whoever, that are citing, do you know what I mean? Whoever, you know, you don't have to have a ring on their finger, but they can help you and be like, look, does that make any sense? All right, cool. How much are you going to trade? I'm going to do 2 grand. 2 grand, that's a lot of money. Why don't you just do 500? No, I want to do, let's just do 1 grand. All right, cool. You do 1 grand, you lose 600. Oh, I'm so glad I didn't do 2 grand. Thank you very much. Like, it helps you so much. So have someone that's going to keep you accountable, and I think that's going to help you in the long run. But you know what? I ain't worried. 2020, we go again. I'm gonna honestly get this money back. It's just who I am in my nature. Like, I don't lose money for no reason. I'm not gonna get bumped by these pot boys that are just moving money into different pots. I'm the problem. Like, get out of it, bro. Like, listen, I'm gonna get this money back in, and we go again in 2020. But don't worry, look out. This week here, we've got some good videos coming out. We've got Oh, what have we got? We've got the look back for the last 2019 year. We've got that. We've got the 2020 vision. Oh my goodness, you're going to want to watch that video. It's going to be so good. I'm going to tell you my investment strategy for 2020. And I really, really hope you enjoy it. Obviously, there'll be portfolio updates coming out this weekend. There's this videos. It's just videos. So if you got this far, listen, hit that subscribe button, hit that bell notification, share the video with your friends. Tell the world that I lost 6,000. It's cool though. But just have that same energy in it. Have that same energy when you see the videos where I'm making that money back in it. That's all I'm saying. Please like, please comment, please subscribe, and I will catch you later. I don't know why I ranted this long. You can obviously tell I'm hurting still. I'm low-key hurting. I'll catch you next time with another investment video, guys. Peace.